Welcome back, investors. Hope you're doing well. Hope you're staying calm in this turbulent week in the market. When we go on CNBC, we're seeing a lot of red. The Dow Jones is down 0.54%, S&P down 0.79%, and the Nasdaq is down 1.18%. I mentioned this in my last couple videos, but I don't think this selling is going to continue into next week. If you're holding profitable companies with reasonable valuations, I think you're going to see a bounce. However, if you're holding high growth stocks with no earnings and very high price to sales ratios, I think the selling for you might continue. So you might want to reevaluate those positions if you're not a long-term investor to begin with. And since what I mostly trade is SPY, the State Street's S&P 500 index fund, just looking at this, it peaked 3 weeks ago and it's down 7.18%. So we are very close to being in the definition of correction territory, a more than 10% drop from the high. And in this video, I want to talk about why. Why specifically this week has there been such a dramatic drop? Obviously on news such as the pandemic or inflation or the Fed, there can be these blips. However, there's been a very distinct pattern this last year and a half or so revolving the third Friday of the month and options contracts expiring. So you see the last 4 days pretty dramatically red, leading up to today, January 21st, which is a Friday, the third Friday of the month, when options contracts for the month are due to expire. In addition, January is the most traded month out of the year. If people want to trade contracts very far into the future, 2023, 2024, by default, they just go to the first month, which is January. And finally, a mainstream news source has covered what I've been mentioning on this channel this entire year. So we have this great article from Bloomberg, stock jitters grow as $3.3 trillion worth of options expire in a day. So let's just read a little bit of this article, and it has a really interesting chart I want to show you. So options expirations of more than $3 trillion are helping stoke market turbulence in a week already defined by the rout in stay-at-home stocks and gyrations in bonds. They're talking about treasury yields rising. The phenomenon, generally known as OPEX, has taken place like clockwork for about a year now. Around the middle of most months, American equities lurch lower, usually near the third Friday, the day that most stock derivatives expire. The dynamic has been blamed on dealers in the options market balancing their exposures by buying and selling underlying stocks or index future. And this month's OPEX is a big one. All told, Goldman Sachs estimates about $3.3 trillion worth of equity derivatives are set to expire today, Friday. That includes roughly $1.3 trillion in single stocks, and $1 trillion in S&P 500 linked contracts. That is $240 billion in options tied just to the world's largest ETF, State Street's SPDR S&P 500 ETF. Options are not only the driver of stocks, of course, and there is plenty of other uncertainty. They're talking about volatility with stocks like Netflix and Peloton. There's no reason to talk about Peloton, guys. The market cap for that stock is so low. But Netflix is very alarming. The fact that a mega cap, this company's market cap had to have been over $300 billion just 2 months ago. And from its high, it's down 41%. And Netflix is profitable. It all comes down to what is the growth prospects of this company and can you justify their very high price to earnings ratio. It's currently 36, but obviously up here it was probably closer to 60. So look at this chart on options expiring. So each one of these circles is the third Friday of the month going back the last year. So this is December. We see a dip. November, we didn't really see one, not a big deal. October, we were kind of in the middle of a rebound from a bigger dip prior. September, there it is. August, there it is. July, there it is. June, there it is. May, there it is. April, not so much, but March, yep, sell off. February, January. So the third Friday of every month, what's happening is as option contracts are set to expire, these large firms that buy thousands, tens of thousands of contracts controlling millions of shares worth of stocks, they have to have the capital capable of buying or selling 100 shares per contract. So, in my opinion, the week leading up to it, they just stop buying. They have to have cash in reserves so that on Friday, today, they can buy or they can cover their positions, usually before market close or shortly after market close in the after hours. So just think about how much options trading has increased in the last year. So here's an article from Barron's, and it says that options trading has soared to record highs this year. In 2021, 9.9 billion options contracts were traded, 32% more than the 7.5 billion that were traded in 2020. So I've been talking about options on my channel. There are lots of other YouTubers teaching people how to get involved in trading options. And with platforms like Robinhood and Charles Schwab, they just make it so easy to buy call contracts. So I don't see this trend stopping. The fact that I can get such dramatic returns on boring companies like Berkshire Hathaway by leveraging my money, I'm going to keep trading options. I don't see a reason to stop. And as more people just seek faster returns in a shorter amount of time, options is where they naturally gravitate towards if they're not long-term investors. So what am I doing in my accounts? In my Schwab account, I don't really have available funds to rotate or buy something new right now. But in my Fidelity account, I am holding cash. So on my channel, I like to have full transparency with you guys. I tell you what I'm doing. I share my losses. I share my gains. Hopefully, you can take away from what I'm doing to better inform yourself, make your own decisions, yada, yada, yada. None of this is financial advice. But in my Fidelity account, I was sitting on $25,000 just in cash. The reason why is I'm doing my taxes next month, and potentially I might need this money to pay my tax bill. So I didn't want to have this invested in the event that the market should take a 7% dip like it has. So what I'm willing to do is to spend a little bit of this money to just buy some call contracts. I'll show you exactly what I did this morning. So I went with an expiration date of March 18th, so this is in 56 days, and I went at a nice round number, basically at the money. So here is the call side contracts for State Street's SPY. The current share price is 443. I'm going to go with a just out of the money strike, a 445. You can see by the volume and the open interest, this is what people are trading at the money right now. So buyers are bidding $1,425 per contract. Sellers are asking $1,431. I'm going to buy a couple call contracts. I think I bought $5,700 worth. So here we go. I bought 4 call contracts at the money on State Street's SPY, set to expire in March. However, I never hold my contracts till expiration. I always buy to close or sell to close. So I'm just looking for a bounce next week, guys. I think the market is going to be green on Monday, Tuesday, maybe Monday, Tuesday, Wednesday. I'm going to watch the stochastics and just take some quick profits. When the market pulls back, let's just pull up the stochastics. 1 second. So when we look at the chart for SPY, if you don't want to mess around with individual stocks, because obviously news can drive a company like Netflix or Peloton, but with State Street's SPY, the S&P 500 index, I was watching the stochastics drag it down, and I was waiting for it to swing back before I chose to buy in. And we're in the very oversold range down here, guys. The percent K line is at 4. I haven't seen it that low in over a year or 2 years since I've been using stochastics. So seeing this being this oversold, we're definitely going to have a bounce back at some point in the next couple days, next couple trading days. So I'm feeling comfortable just entering a leveraged position on State Street's SPY, take a little bit of profit, go back to my cash position because I definitely need that money to do my taxes next month. Okay guys, that's where we're at. I'm still unpacking and getting organized in the new house, but eventually I will start filming in my new YouTube area of my house. I'm really excited for it. If you like these kinds of videos, give me a thumbs up. Easiest way to support my channel. If you have any comments or questions, let me know down below. I love hearing from you guys. Till the next video, take care.